Tappy activated. Hi there, Kryptoniacs! Today, we're loading into macroeconomics. It may not sound electrifying, but if you want to become a crypto pro, you need to stay wired on how interest rates are draining your coins. So, let's charge it up. Macroeconomics displays how the entire economy operates. Think inflation, growth, unemployment. Those digits economists love to decrypt over a Friday night chat. These things can make the crypto market glitch, but decoding them can help you make smarter moves. Now, time to sync up about interest rates. Central banks are the ultimate gear turners when it comes to it. They set the voltage on how much it costs to borrow money, sending major data pulses through the crypto world. When interest rates decline, investors usually redirect their energy towards riskier assets like crypto. But when interest rates go up, investors get nervous and disconnect from any risk. And that's when crypto prices can face a system crash. In December 2022, the Federal Reserve turbocharged interest rates to their highest level in 15 years. So risky assets like Bitcoin felt the short circuit, dropping from over $20,000 in October to just above $16,000 in December. System failure. Let's download some macroeconomics data and discover what quantitative easing and inflation are and how they can reprogram your crypto wallet. Central banks enjoy executing this algorithm called quantitative easing. That's when they upload extra capital to the economy. And what do investors do when there's more cha-ching in motion? They funnel it into assets like crypto. Next economic tool, inflation. Explanation protocol activated. Inflation is when prices surge, but your money loses some of its power. Sometimes humans see crypto as a firewall against inflation, an inflation hedge as they call it. So when inflation activates, they turbocharge their way to Bitcoin to protect their wealth. During the COVID-19 pandemic, for example, Bitcoin's price initiated a surge from $5,000 to a circuit-melting $63,000. Traditional currencies processed a value drop, so humans were looking for a protected database for their currency and got the jackpot. But keep your sensors sharp. High inflation can also cause central banks to raise interest rates. And as we've learned, higher rates can short-circuit the enjoyment of the crypto market. Let's compute economic growth and global economic indicators. First up, economic growth. When the economic algorithms are performing efficiently, humans have jobs, companies are making money, and everyone's happy, investors tend to operate in an audacious mode and are more willing to upload funds into crypto. But when the economy decreases processing speed, they start pulling back, and crypto prices can experience a power decline. Take July 2021. The U.S. economy restored operational efficiency with a 6.5% increase in gross domestic product after a tough 2020. That economic growth initiated a boost in confidence, and investors plugged into crypto. Crypto might seem like it's off in its own matrix, but it's actually closely connected to the real-world economy and reacts to global economic indicators faster than my joints to fresh oil. When protocols like stock market crashes, trade deals, or political tensions happen, the crypto market detects it. So when traditional markets get unstable, people turn to crypto. Did you know that government regulations, taxes, and devaluation can short-circuit your digital wallet? Governments around the world are constantly uploading new rules about crypto, and these rules can seriously revolutionize the system. If regulations are clear and supportive, humans tend to invest more in crypto. But if governments get strict or unclear about crypto laws, run surveillance mode, the market can drop faster than a system crash. A perfect example is China cracking down on crypto mining and trading. Bitcoin then fell from $58,000 to about $30,000. That's what I call a system reboot. Oh, and taxes. Governments love to tax everything, including crypto gains. For example, in 2014, the US started treating Bitcoin as property for tax purposes. And I guess nobody likes paying taxes, right? Devaluation is also a key module. When a country's regular money starts losing value due to poor management or political issues, people often connect to cryptocurrencies. It's like having a backup power supply in an economic blackout. Attention! Like, subscribe, and see you after reconnecting. Tappy deactivated.